Hello everyone, my name is Michael Lamai. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. Today we are launching a brand new series about what to buy. There's over 10,000 stocks in the stock market, and these are 10,000 stocks that are of decent quality, stocks that are, I'm not talking about the penny stocks or the low-priced stocks of $1 or $2 a share. I'm talking about stocks that are institutional quality, that are trading at above $15 a share or more. And so these are the kinds of stocks that we want to focus on. The reason why we like to focus on stocks that are of institutional quality is because it's their demand that's ultimately going to drive the price up to $20, $30, $100 a share, $1,000 a share, right? When we're looking at things like Amazon and Google, it's those kinds of names that we're interested in. Not when they get to be that big. That of course stocks could continue to move a lot higher, but we're interested in finding the stocks before they make those gigantic runs. So I wanted to start a brand new series about how we actually go about finding those stocks. The way that we go about finding those stocks is first by running a series of scans on the market, and we run scans based on both fundamental criteria, things like earnings, sales, return on equity, profit margins, those kinds of things, and we also run scans on technical criteria as well. Things like stocks that are close to a 52-week high, stocks with relative strength, stocks that are outperforming the major indexes. Those are the kinds of things that we look for when we're looking for these stocks that can potentially go up 100, 200, 500% or more over a relatively short period of time. So the first scan that I want to show you is about relative strength. And the reason why I want to show you relative strength first is because these are going to be the stocks that are outperforming the market. Well, we're really only interested in stocks that are beating the major averages, and the one that we track the most is the S&P 500. The reason why we look at the S&P 500 and not the Dow, for example, is because it's so broad, and it's the benchmark that the major institutions look at, so it's something that we should look at as well when we're trading our stocks. So let's take a look at how we set up these scans. We have it set up in our own scanner, ChartYourTrade MRI, but you could set this up with your broker or many other free scanners out there. Well, we just have everything neatly packaged here for ChartYourTrade MRI subscribers. Well, we did a full blog post on how to scan for the best of the best growth stocks. It's right here on ChartYourTrade. When you have a chance, go read the whole thing. It's great. It gives you everything that we scan for, and you can take this information, put it into whatever kind of trading software you have and use it. But let's take a look at the relative strength scans that we run. So for relative strength, very simply, we look for the relative strength to be no more than 5% off of its own 52-week high. So that's going to allow for a little bit of a consolidation in that stock while still being a market leader. We want the price to be $15 or greater, so that way we ensure that it's an institutional quality stock and not this penny stock garbage that that tends to suck in a lot of new traders. We want to avoid those like the plague. And we also want the 50-day average volume to be at least 200,000 or greater. Now, I used to look at stocks that were at least 400,000 or greater, but I lowered the parameter to 200,000 or greater because I wanted to capture more high quality stocks and not rule anything out at at this juncture just yet, but in general, the higher the volume you see, the better. And the reason why is because if the average volume is fairly low, then that means that one big player can come into that stock and move the stock either in your favor or against it on a whim. And we're looking for something that's less likely to happen to. It's not nice to wake up one morning and find your stock down 30% out of nowhere because one major player decided that they changed their mind or wanted to exit or something. So in general, it's just a better idea to go with the higher volume stock, so that way no one individual player can make or break the market in that stock. So back to our scanner. So let's run the relative strength scanner and see what it turns up. So also in ChartYourTrade MRI, since we're using this, I'll tell you about it. We also filter based on this ideal growth stock screen. Now, an ideal growth stock has multiple different parameters. We list them all in this blog post here as well, and you can take a look at them. And the ideal growth stock screen is simply taking a look at what the biggest winners, what the historically biggest winners in the stock market had before they made their runs, and applying it to the stocks that we're looking at. And we can filter based off of, I only wanted to have at least 10% of what an ideal growth stock had, all the way up to 100%. And anywhere in between. So that way we could really filter down and hone in on just the best of the best growth stocks and the ones that have the qualities of the ones that have historically been the best. So back to our relative strength scanner, let's take a look at it with the ideal growth stock screen set at 50. So this week, it's returning 22 different stocks that both are passing the relative strength scanner and are also have at least 50% of what an ideal growth stock has. And so, what I like to do with the scanner as well is to look at this, not only look at the stocks that pass the scanner, but to also see from which industry groups they're coming from, because those are going to be some of the leading industry groups, right? So if there's a whole lot of stocks that are passing from one particular industry group on this relative strength scanner, then those are the kinds of stocks that are currently leading the market. And so if those are offering opportunities, we want to pay close attention to those, and we want to keep them on a special watch list. So this week, taking a quick look, it looks like there's a lot of computer service stocks popping up, and also a lot of stocks in the medical drug-related field, right? So we have a few biotechs, we have a few in the medical equipment and supplies, we have another one down in retail drugs. So just that general healthcare related industry, we're seeing a lot. So we'll take a look at some of these stocks and see what they're doing. All right. So the first one, BZUN. Yeah, I'd keep that one on a watch list. Not really something that's viable right now. Recently broke. WIBO. This is one that was on our radar way back here, and many of our ChartYourTrade MRI members took advantage of it, wrote in, and as you can see, it's been riding that trend up. It's been on this relative strength scanner and on the other scanners for quite a while. ATHM. This one actually looks like it might be in some kind of a viable pattern. It's had a strong run already. It's a little extended, but let's see what it looks like on the daily chart. So here on the daily chart, it looks a little less extended. I might actually attempt buying this. It would have been a nice buy on Friday if it can continue to break out and get above this level here. Well, what is that? That's 66.40. So if it could get to 66.50 and continue moving on some high volume, maybe it's worth a stab, but it has had a significant run, so maybe not. Okay, why? This one pulled back, reversed off of its moving average on heavy volume. We can see that right there. That's a great way to trade reversal if those are the kinds of things that you like to trade. Here again, we could see that downward sloping trend line. It tried to break out, reversed. So that's another one that I would be interested in if it could get above this high here, and then maybe use this low down there right now for intermediate term, intermediate to longer term support, because look at this chart here, right? So as it was consolidating, it came down and it retested this former low over here, and so right around the 68.60, what was this low? 68.44. So right around that 60, and well, what was this over here? So yeah, 68.60. So right around the 68.50, $68 level, we're seeing support for the stock, and we're seeing it come in on some volume. So those are the kinds of things that when we're looking at a chart, we want to be mindful of. Well, when price is coming in, where is it stopping? And how is it playing around that level? Is it reversing? Is it closing at its highs? Is volume coming in? We want to be mindful of all these things. Let's take a look at this last one here, YRD. Looks like it's getting ready to break out. Again, the volume at these highs is a little troubling. Could take a quick look at the daily chart. And yeah, it broke out already. In my opinion, it's a little extended right now for me to take a stab at this one. If I were, I would look for an entry somewhere when the market opens again on Tuesday. It's a Labor Day weekend, and yeah, I would probably use a low, maybe around like the $40-ish level if I was going to try to take a stab at this one, but it's not really tickling my fancy right now. Anyway, let's take a look at some of these biotechs, because those seemed interesting. Yeah, well, see, look at this. It's already breaking out to new highs. Here's another one. Oh, SUR Biotech. This one's consolidating. This one actually looks pretty good. It's had a big, strong run already, but look at how volume has continuously come into the stock as it's consolidated. This is another one that I would definitely be at the ready to try to go for. That's a nice trend line. I would be ready to buy this right as it breaks out above either this level, or I would even take a stab at it right as it gets above last week's high on Tuesday, when the market opens. I would use this level right around over here, 1988, as my support level, or just below that, maybe 1970 or 1975 even. The stocks that are displaying relative strength, well, we definitely want to keep them on a separate watch list, because they could give opportunities to buy again and again and again. One that we bought a long time ago for the model portfolio was Alibaba, ticker BABA. We originally bought this one way back here, back in January, and it's been on the relative strength scanner for a very long time. It was outperforming back here, right? And so it's It gave us multiple times to get in. So back over here, over here after it consolidated, and it's just continued to run. So that's that's the reason why when stocks are displaying relative strength and they're doing it consistently, we want to pay attention. Well, we need to take notice so we can take advantage of these kinds of opportunities, well, when they arise. That's what the market's really all about. It's about making ourselves available for the opportunities as they emerge. And so that's what I have for you today. Thank you all so much for watching. I truly, truly appreciate you watching this video. Please take a moment, leave a comment below, let me know what you thought. Let me know if you have any questions. I will personally answer them. Also, like the video, subscribe to our channel, and I will see you again very, very soon.